Kunal Sodhani from Shinhan Bank India. First of all, welcome to Samvat 2077. Wishing everyone a very happy Dhanteras and an advance happy Diwali. Well, I think the point of discussion remains financial markets across globe. And there has been a lot of volatility, because of various events, which have been lined up and which have gone in the past, like the US presidential elections and others so far. So let's break it into domestic as well as on the global front. So first of all, let's see what is happening on the domestic front. So the good news is, we begin with lower COVID cases, which is, the fatality rate is less than even 1% now, which is a very healthy sign for our country. Also, if we see various schemes and various developments which are happening on a sectoral basis, like government supporting various sectors with their incentive schemes, they have been quite positive in nature. GDP growth rate has been revised on a positive note. Things are unlocking, things are moving on. But yes, at the same time we need to understand from other countries like US, Europe and UK, where a second wave has already begun. So we need to be cautious, we need to take extra care, we don't need to be casual about what is happening, but take right steps even in the unlocking which is already in place. So talking straight to the markets and about the markets, if we talk about the domestic equities, we have seen a massive inflow, for the month of November to the tune of around $4 billion till date, which is really healthy because of the unlocking, and a lot of confidence has been shown by the FIIs into our economy. Apart from it, the FDI growth, if we see the last quarter, if we see it is roughly around $35 to $36 billion FDI inflows. So they have been really tremendous, which is again a positive sign. As I said, government is also coming out with their fiscal reforms with respect to various sectors, which are also very supportive. On the other end, if we see RBI also very prudent. So if we see particularly, while our discussion is more on rupee, Forex and dollar rupee particularly, or G7 currencies, we have seen a massive growth in terms of our FX reserves, where RBI has been quite active, where the data itself shows of September, where they have been there intervening of roughly buying dollars roughly around $13 billion and selling roughly around $5 billion. So net, this activity of increasing reserves from March of $470 billion till date of $560 billion has been supportive on two fronts. One is obviously the import cover. Our import cover has grown as good as for 13.5 to 14 months. Also, in times of uncertain scenario, if something happens on the second wave, we have enough reserves to protect even our external debt to a large extent, which again is roughly around $565 billion. So we have the entire almost 100% cover for the entire external debt, dollar external debt, and also we are prepared for our import cover very well. Thus, we are not seeing any kind of sharp depreciation in dollar, or in other words, an appreciation in rupee. So we saw a low of 70 to 80 on the lower end, and then a spike from around 73 to 75 recently. What is our current view now? Our current view stands that the trend still remains down because of the heavy domestic inflows which are there in the market. But obviously RBI has been quite present in building up their reserves and to curb the volatility, as one of the key role remains to curb the volatility as well, price stability in simple words. So overall trajectory, if we talk about in terms of numbers, I think 75.60 remains a very important resistance on the right side, and on the lower end 73.60 is trying to make a base where such lot of buyers have been seen. If we go sub 74, it's a quick up move happening around those levels. Again, we need to also watch dollar index because key events like Brexit is already under play. But I think we will miss the November mid deadline of the Brexit thing, where the final deadline being 31st December. But the talks were about to finish by mid of November, but that doesn't seem so happening, which is taking a toll on the pound as well. Thus, we cannot ignore dollar index, where euro remains a very crucial part, where I feel there is a probability of euro moving left because again of the concerns of tighter norms, strict lockdowns, cases just going higher, fatalities are just increasing, hospitalization is again going higher. So such kind of scenarios may put eurozone under pressure. So personally, we believe dollar index can move higher because obviously euro cable, these can take a beating again. So there is a possibility where we personally feel that dollar index can test 94 levels once again. But it has tested several times but has been reversing to 92.70. But we feel personally it can test 94 once again. So that's on the dollar index front, because we cannot see rupee in isolation purely basis of the domestic flows or the speculative flows, or maybe a central bank coming into picture. So our view on the DXY remains very clear towards 94. 90 to 70 is trying to be a base for dollar rupee. For importers particularly, we would like to recommend that anywhere, if we are getting any levels of 73.80, 73.60, we should at least start hedging ourselves. I am not saying, or we are not recommending the fact that you should be 100% hedged, but hedging in a staggered manner, level by level, remains the key. So this can be a starting point, where our hedging should be begin. It should start around 73.80, 73.60 levels. And for an exporter, if we see 1 year forward premium also, it has been roughly around 4.05%, which is really good. Personally, that's what we believe. And plus a level of around 75, 75.20 should be a very beginning level for an exporter to start hedging, because if it is 3 rupees and if you are getting 75, so roughly a 1 year hedge is around 78 levels, which is a very decent level, or more than a decent level, I would say, to begin hedging of their exports exposure. Well, the markets will be volatile. Bihar elections again was, I think, not much of a surprise on the domestic front, where BJP again leading their way. So not much of reaction seen on the financial markets, where somewhere it was quite discounted to a large extent. So all in all, wish everyone a happy trading session ahead, a happy new year, coming new year, wishing everyone a happy Diwali, and the entire Shinhan Bank. These wishes are purely from the bottom of the heart for every investor, every trader, because we understand one thing, where even in kinds of any pandemic, what we personally believe is a pessimistic is one who sees difficulties in every opportunities, but an optimist is one who sees opportunities in every difficulties. We believe every one of us are optimists, and we will bounce back. We are already in the process for the same. Thank you so much, everyone. Thanks a lot.